All right, let's talk about the best time to buy a home and whether timing the housing market is something that makes sense. Many people have written in about this, and usually the framing of the question is something like, David, I understand and agree with you that trying to time the stock market doesn't make sense, but what about housing, whether it's for pricing or for interest rates, or what about that? I've already explained to you why it's a fool's errand to try to time the stock market. Humans are terrible at predicting markets. You've got to be right twice. You have to buy and sell at the right time, etc. And in addition to that, there's tax implications over the long term. Buying and selling rarely beats just sticking with the markets because people get emotional, they make mistakes, etc. Okay, so how does this apply to the housing market? And this is particularly relevant right now because there are many people who are understanding that prices are still pretty high for housing. And also, the mortgage rates are very high. So, why would anyone ever buy when prices are high and mortgage rates are high? Now, at the same time, the housing market had quite a run, particularly in 2020 at the start of the pandemic into 2021. And there's been a little bit of a correction, but there's still lots of parts of the country with high competition and more demand than supply, and prices are still sky high. And so, what you have are many people that are saying, I'm going to wait until next year, or I'm going to wait until the year after that, because by then the market will have cooled down or mortgage rates may have gone down. So, first things first, let's just kind of like generically plot two different things here. One we would call so in green we will call these prices. Okay, so this is home prices, and imagine a we'll pretend that we are. Actually, I'll do that in a second. Imagine that home prices have been something like, this, they mostly go up, sometimes they go down a little, and then there's been this big increase, and then maybe now they've just started to come down a little bit. Separately from that, we also want to have mortgage rates, right? And mortgage rates are also another factor here. In general, it's considered that mortgage rates sort of move opposite to prices, but it's not always true. So while they might come down and then go up, you could actually have a different correlation. And then right now, mortgage rates have gotten very, very high. And in fact, I shouldn't, I redrew the entire thing. Okay, so just sort of like this, and then they're going up. Good. And then so red, we will call I for interest rates. And let's see if I can unmess this up a little bit. We are currently, we can just say that right now, this is where we are. This is today. Okay, today. So it certainly seems reasonable that if we're starting to see this sort of apparent peak in prices and rates are high, you would expect that at some point prices would continue down, and that would be a good thing for you. So it makes sense to wait. There's a couple problems with that. First of all, we're not that great at predicting this, and we don't know what's going to happen over the next couple of years. What if in the markets you're looking to buy, prices are going to remain high, but interest rates are going to get even higher? Right? That's one possibility where rates could go even higher. And in your market, right? Because with this, if this green bar is the overall market, we could set this other green to be some local market. And this might be a local market that grew more and didn't come down as much and is actually going to go this way. Okay. We just don't know. So this would be your local market. So that would be one concern. And we just don't know, right? It's possible we're going to have a long high interest rate period, and where you live, prices aren't going to come down. You, in a sense, waste 2 years where you could have both had your home and been building equity. What if, rather than coming down, inflation gets even worse and rates go up higher? What if supply issues in the housing market continue and new construction is really slow because it's taking a while to get stuff, and so the existing housing stock continues to get more expensive? So we don't know the answers to any of those things. My perspective generally is as follows. Concern yourself with, number one, am I at a point in my life where I'm ready to buy a house. So we might call this one, ready. And by this, we just mean like where you are in your life. Are you ready to buy a house? Two, what is the situation with your income? Do you have a consistent form of income? And can you reliably obtain this home that you're looking for? Three, I want to ask about whether you can put 20% down. I believe that unless there is no option, renting, finding a cheaper house, whatever, you want to avoid something called private mortgage insurance, PMI, which is just an extra cost on top of your monthly payment if you put less than 20% down. So do you have a 20% down payment? Do you plan on living there for a while? Okay. Now, I will tell you, I have had real estate transactions where I have bought and sold within a year. It was not my plan, but because of circumstances. I was lucky that the market was so explosive that I was able to do that and not lose any money. It was still a nightmare and it was still a pain because moving's a huge pain. But you don't want to be buying if you think you might be moving relatively soon. By that, I mean sooner than 3 years, ideally 5. Every market's different. Everybody will give you a different amount because there are all sorts of costs that go into buying and selling. When you buy, particularly with a mortgage, there's all sorts of mortgage origination costs, appraisal. Initially, your mortgage payments are overwhelmingly interest. So particularly in those first couple years, you're building very little equity. When you go to sell, you will have to, unless you do it for sale by owner, you will have to pay a realtor 4 to 6%. You may have to do work on your home. There may be transfer taxes, transfer stamps, all these different things. So you really ideally, and I know guys, there's exceptions. Super hot market, you buy, you sell 6 months later, you make money. We've all seen it happen. Generally, you shouldn't go in planning to be there less than 3 to 5 years. And if all of these things, you feel that you're at a point in your life where you're ready to own, you have the income, you've got 20% down, you've got the timing, you're going to stay, you can make the case that it makes sense to buy when you need the home. If rates go down, you later refinance, you'll build some equity, and you will own the home, which has value. Remember, you get a place to live. Whether you buy or rent, you have a place to live either way. The most important thought for me is the market's going to do what it's going to do. The Federal Reserve is going to respond as they're going to respond. Prices may go up or down. Interest rates may go up or down. What we generally know is that over the long term, real estate is a safe, if not explosive, investment. A lot of times people say, "Oh, my parents bought a house for $100,000 and now they sold it for 1.5 million." Okay, well, $100,000 was how much in present value dollars from 1985? And how much did you pay in real estate taxes that entire time? And what was the total of your mortgage payments? Because it was interest. Once you really subtract all of that out, it's usually a pretty modest, humble return. Plus, you've had a place to live and it functions as a savings account. That will probably continue to be the case. The variable is the high interest rates. If you can afford the payment, and you may have to revise downward how much home you can afford because of the high interest rates, and you're ready to get a house, I say try to get the house. Artificially waiting for no other reason than you're waiting for an indicator to come down historically has not been a great decision, and I don't suggest doing it.